This is your investment update for September of 2017. Good month for stocks. The S&P 500 was up a little over 2%, and international stocks were up just shy of 2%. But overall, a really good month for the stock market. Bonds didn't do so well. The 10-year Treasury moved up about 0.2% in yield over the month. International bonds, which had been on a tear, were down 90 bips, and the domestic bond market was down about 50 basis points. So kind of a mixed bag there. We had seen both bonds and stocks going up together throughout the entire summer, and that's kind of shifted here. Part of that's due to some of the rhetoric from the Fed about them unwinding their balance sheet starting in the fall, and then maybe, a little bit more of a dovish take on rates. That looks to be something that was going to continue in the fall, and I think the Fed will begin to start to unwind their balance sheet. We'll have to see how the bond market reacts. Overall, the stock market seems to have its own inertia. Days when you might read some really bad news the night before and you come in and you think it's going to affect the market. The market's actually up a lot. That seems to happen more and more these days. And that's just when markets kind of start going up at this rate, they kind of get their own energy sometimes. But it's important to remember that risk management needs to be in place and to pay attention to what you own, because valuations historically here are stretched. So we continue to watch that, and we continue to watch some of the names in the portfolio and how they may be performing in this environment. And for a lot more than that, make sure you check out our newsletter that'll be out about the same time.